And when I say corrections, when you're going up, right? Say a share price is going up, it will go up and then it'll have a correction, like say halfway down to where it was before. And then it goes up again halfway down, like a sloping staircase. When things are crashing, they tend to crash and then the share price comes all the way back up, maybe even back to where it started plummeting, and then it plummets all the way back down again. It's those kind of violent moves. So you can make money shorting if you're really quick, or if you're really, really amazingly patient, but nothing in between.
All right, so now today with Glen Goodman. It's going to be fun to talk about his experience as a trader. A lot of stuff to talk about there for sure. All the way from 20 years ago to now cryptos. It's going to be a good experience. So let's kind of unpack this and discuss about his story, Glen.
Okay, so yeah, it's been about getting on for 25 years, basically. I was a TV reporter for the BBC and another company, ITV News in the UK, which is kind of the BBC's main rival. So I sort of switched between them over the years, but all the time I was a reporter, and most of that time, or a lot of that time, I was a business correspondent. So I was specializing in the economy and finance and all of that kind of thing. So I was kind of immersed in that world anyway. But most reporters I found in the business world, in sort of business reporting world, don't actually trade themselves. But I kind of got the bug pretty early on. I tried to trade, but what I discovered is you can have all the knowledge about business in the world and still lose all your money, like I did in my early days of trading. If you don't know how to trade, trading is a skill. It's not just like, oh, I've heard some things, so I'll buy this share and that share and the other share and I'll be fine. It's weird how everybody thinks of it like that. And I'm sure you come across this the whole time, that people just start trading and like 2 days later, they already think they're kind of a genius and they don't really need any help. And in fact, they might even start their own channel teaching other people how to trade when they've been doing it for 2 weeks or whatever. And you don't find that in other things. You don't find people going, I want to be a brain surgeon. So I've just watched this YouTube video about brain surgery and now I'm going to try my first one on my mum. It's like, well, it doesn't make any sense. And it's annoyed me for years. Have you got any idea why people think like that? Why they think they're brilliant at it immediately and they don't think that with other things?
I was trying to think, is it a perception not from movies, but is it a perception that maybe trading is easy? Like you can just do it at a computer. You don't have really to think, like people are getting money and stuff. It might be a perception people have of trading in general. I don't know. It's kind of hard to sell though. It's kind of tricky.
Well, it's probably partly influencers who use their Ferraris and stuff, as I said in the previous bit. But also, I was going to say maybe I'm partly to blame as well, because our books, like my book is called The Crypto Trader: How Anyone Can Make Money Trading Cryptocurrency, right? Which makes it sound easy, but I wasn't saying how anyone can make money trading cryptocurrency like in 5 minutes time. It's like, you have to read this, like this much at the very least. I've put everything I know about trading. So I'm not just trying to advertise my book. I am trying to make a point here. But, I put everything I know about trading into those couple of hundred or few hundred pages, right? And I squeezed it in. And yet it's just pretty much like essential stuff. If I was to kind of, elaborate massively on all the different things that you need to understand in order to be a good trader, it would make up thousands of pages. People need to take time, not just to learn, but also to make a lot of mistakes along the way. It took me years to become a consistently profitable trader. Like many newer traders, yeah, I had some lucky breaks early on and lost some money and made some money. And, I had various good times, but it wasn't consistent. In order to make money trading consistently and not get 3 Ferraris and then lose the 3 Ferraris and then be in debt for have -2 Ferraris, that's not the way to do it because you've got a life ahead of you, right? It's not just next month or next year. You've got a whole life to live, especially if you're only, in your 20s. You've got a very long time. You need to learn to become consistent, and you need to learn to manage risk in a way that will not jeopardize your entire wealth or even a large chunk of your entire wealth. And that is really, really hard to do. That's probably the hardest part of trading, I'd say, is learning different methods and having the discipline to stick to them, which allow you to not lose massive amounts of money ever, right? Because if you lose, it only takes once. You could be a consistent, brilliant trader for 10 years, and then there's a massive crash and you hadn't managed your risk properly. So you weren't prepared for that crash, and you lose like 70% of your wealth in that once in a 10-year crash. That is a perfectly normal thing to happen. Happens to tons of people. Do you want it to happen to you is what I would ask anybody watching right now.
So you started trading from as a journalist, right? Is that kind of how it began? And how did it go from there?
As I said, I was kind of doing it in my spare time while being a financial journalist, and finding that the financial journalism that I did every day was not that much use for actually making money trading. I took it from there. As I said, made mistakes, trial and error, years and years, trying to achieve consistency. I had my first big breakthrough in 2008 by anticipating the great financial crash. The Times did a big, nice feature on me, a whole page feature some years later, calling it The Little Short. They wanted to coincide it with, when that book, The Big Short, came out, because I'd done what they called a little short, because I'd turned £3,000 into 100,000, whereas like Michael Burry and the others turned, I don't know, 1 billion into 10 billion or whatever. So mine was smaller, but the same principle, as in I felt from a fundamental point of view, and this is where my being a business reporter came in useful. I felt from a fundamental point of view that the market should be falling, but wasn't, that the big banks were in deep, deep trouble all over the developed world. And there really should be a massive banking collapse, because as far as I could see, there was a very strong suspicion that a lot of the major banks were basically insolvent. But they were all denying it, of course. And as it turned out, some of them were. So I was ready to place a short. But because I'm a sort of realistic trader who had learnt after several years in it by that point that you don't go against the market. Going against the market is a big mistake. So I couldn't just start shorting like Michael Burry did while things were still going up. If you've seen the movie, you'll know that he almost lost everything or not. Was it Michael Burry or one of the other characters? Or maybe it was several of the characters. I can't remember. But the main story of The Big Short was that some or all of them were losing huge amounts of money because they had taken a directional bet that the market was going to crash at a time when it was still effectively going up. So instead, I waited for the market to kind of it spent a good 6 months going over the top. And as it started falling, my technical indicators told me when to enter, when to go short. I started going short, and then the market started collapsing badly. I started making large amounts of money. The UK government even banned shorting of banking shares, but it was too late because I was already short, and they allowed people who already had shorts open to keep those open. So I was able to keep making money on my banking shorts, and that was good, but not for the world. Only for my bank balance. So that was my first major breakthrough. After that, I basically had to decide, am I going to make a career of this? I can't do this, and put so much energy into trading, but also be a full-time TV news reporter. I sort of mulled over that for several more years, actually, trying to do both at the same time. And eventually I just decided I'm going to quit my job. I'm making more money trading than I am from my day job. So every time I went to do a TV report, I'd be thinking, I could be making money right now. I mean, I suppose I was making money from a salary, but it felt like I was missing out on trading opportunities. And I probably was. So eventually I decided to quit, became a full-time trader, done that for more than a decade now, and it's been great. The thing I miss most is just being in the office with other people my age and just kind of having a chat and just coming into the office in the morning and go, yeah, you're right, yeah, oh, traffic was terrible or whatever. I don't know, just stuff like that. It's a little thing, but it's really the only thing I miss. I mean, what else is there to miss about? All right, okay, no, I was a TV reporter. I did exciting things like I interviewed famous people sometimes. Like I interviewed 3 British prime ministers. I was on the red carpet interviewing Leonardo DiCaprio and other A-list celebrities from Hollywood. But those were rare occasions, right? Most of the time, the job as a TV reporter is you go to work and it's like, here's a boring story, make the best of it, try and make it sound interesting. So, so I don't miss that.
That's a cool background. I'm curious how the shift went from you going from journaling to then going into trading full time. Did that kind of jump went well? Because you went from like a fixed income, a good career to then trading full time. How did that shift happen?
Yeah, I did it a bit more gradually, which was nice of the company to let me do that. As in, I quit. I took, I quit, as you do. But then, as many people do, I came back freelance like 1 day a week. Sometimes it was 2 days a week, but never more than that. So I would like do about 1 day a week, which was amazing because it made me feel like I was still part of the working world. Okay, so the salary, or not salary, but the payment obviously is pretty small when you're only doing 1 day a week. So I still had to take that massive kind of loss of salary on the chin, which was okay because, like I say, I was making more money trading anyway. But it sort of eased me into this new world by being able to go into the office once or twice a week. It wasn't such a shock. It wasn't like jumping into a freezing cold bath.
Well, tell me what market you beginning with in trading. Was it stocks or?
Yeah, it was stocks. Back when I started trading during the dot-com boom and crash. So we're talking like the turn of the millennium, which makes me sound very old. And, around that time, online trading was in its infancy. I was still on a dial-up connection, for heaven's sake. I didn't even have broadband for several years after I started trading. So, it wasn't easy to trade anything and the tools were very rudimentary. But luckily, brokers had started to offer online trading. And actually, that's one of the reasons I think why the dot-com boom was such a massive boom, was because there were millions of kids like me just suddenly is a bit like the beginnings of crypto, you see, when just millions of kids suddenly go, oh, we've been allowed to do this. This is fun. Let's try this, So that's pretty much what kicked that off for a lot of people. The difference between me and my friends is we all lost money in the dot-com crash because everybody pretty much did, apart from the people who were clever enough and wise enough to go short at that time. But all my friends got sick of it because, oh, this is rubbish. Look, I've lost all my money. So they didn't go back to it. But I was determined not to let it beat me. I was like, this is a challenge. I'm going to conquer this trading thing. So I started reading dozens of books, hundreds of articles, and just everything I could. There was obviously no YouTube. So there was no YouTube videos, but I was just reading, and getting as good at it as I can. And so, yeah, it's... After stocks and shares, about a couple of years later, I started trading futures because new tools had been opened up in the UK for me to be able to do that for the first time. Spread betting, as it's called here in the UK, which is a kind of tax-free CFDs thing. It's basically like CFDs, but tax-free in the UK, so it's fantastic for us. And I started trading futures, so commodities, treasuries, Forex, the whole lot. And that was a really different thing. And again, I started losing money because I couldn't get my head around it. It's a very fundamentally different thing, I think, trading things that are zero sum. So they can go up, in the long run, Forex particularly, but even most commodities basically don't really go up in the long run. They kind of go sideways. They might go up for years at a time, but then they come back to a baseline very often. Whereas stocks and shares, obviously, the default direction is up. And that's kind of, in theory, the same for crypto. So I tend to trade cryptos in a similar way to the way I trade stocks and shares. These great long run-ups, these huge booms that can last for, months or years in some cases. And even though cryptos do come down again very heavily, they tend not to, or at least the main ones, tend not to come all the way back down to where they started. They then start the next boom from a higher baseline. So they're kind of more like stocks and shares in that respect.
Interesting. So walk me through your trading style a bit more and kind of tell me what you're focusing on trading these days.
Well, like I say, I trade pretty much everything, though at this moment in time, cryptos are not great. So I'm not really trading them. I said publicly on my Twitter that, or X, that I came out of Bitcoin completely a while ago now. I sold half of my Bitcoin holding, I think more than a year ago, at a higher price than where we currently are, because I wanted to take some profit at that point. And then most recently, several weeks or even months ago now, I forget the exact date, I sold the rest of it and told everybody what I was doing, because I felt like the bull market was very much in question at that point. So this kind of leads me into describing my trading style. So I'm kind of a mixture of a trend follower and a swing trader. More a trend follower. So what that means basically is that I wait for a market to bottom in the sort of medium to long term. So I'm talking about, for example, with cryptos, it's most easy to explain with cryptos, because with cryptos, they had these 4-year cycles where they go up and then back down, or not all the way down, but most of the way down. And then they start a new cycle all the way up, or every 4 years. That's kind of broken down in recent times. And I did warn people that that would happen. People keep talking about the 4-year Bitcoin cycle as if it was, set in stone, like God wrote it on tablets of stone. There will always be a 4-year cycle. No. Okay. All markets collapse at some point. All markets break their trend lines. You know how it works. It's just silly to assume that the same thing's going to happen forever. But people insisted, so I tried to find analogies for them. For example, the Japanese stock market is one of my favorite analogies, even though it was on a much longer time scale. It did something similar to Bitcoin in the sense that it sort of formed the long-term parabolic upwards move that was composed of smaller cycles, right? And that's kind of Bitcoin, these 4-year cycles, but generally heading upwards and upwards as the years go on. And the Japanese stock market, again, it had been like that for more than 4 decades, almost 5 decades. So obviously people assume that would carry on forever. Why would it not? It's already been half a century. But no, in 1989, there was the massive crash. And the Japanese stock market, if you look at it now, it took 35 years to recover just to the point where it was before the crash. And that's before it got any higher. It's recently got higher for the first time since 1989. So, if you compare that to Bitcoin, as I say, Bitcoin's working on a much shorter time scale. All of that sort of 50-year Japanese stock market history kind of effectively happened to Bitcoin in only about a decade or so. But, it just goes to show we could have a very long crash at some point. And maybe this is the beginning of that point. It's impossible to know, but I'm out of Bitcoin. So that's okay. That's the great thing about being a trend follower. So for those who don't understand what trend following involves, you wait for a cycle to sort of get near its bottom, and then it turns around, it starts going up. When you see it start going up, you buy. You use technical signals like, patterns, setup patterns, technical analysis, breakouts, or you can use moving average crossovers, which is another very typical trend following technique. Is when 2 moving average lines cross each other, then you buy, and then you wait till the market's gone all the way up, and then when it gets over the top, usually you'll see the moving averages cross each other over with a lag after the top, and then that would be a selling signal for a trend follower. So typically I will tend to buy early on into a rise and then sell just after the top. And it's a technique that has worked incredibly well in crypto over the years, works really well in stocks, works well in futures some of the time as well. Trend following used to be really, really popular, but then it had a bad few years in commodities and futures, and that kind of put a lot of people off. And as I say, I trade differently with stocks and shares and crypto to the way I do to futures anyway, because of this general upward bias. It makes it fundamentally different to trading futures. So I have a sort of more refined trend following slash swing trading style as far as crypto goes. Anyways, it's all explained in my book.
Are you more of a indicator based trader, or are you more using price action, or what's you kind of go to for that kind of trading style?
Yeah, price action, particularly with cryptos. With stocks and shares, I pay some attention to fundamentals, profits, revenues, growth prospects, all of that kind of thing. With crypto, you don't have much of that. You've got growth prospects, and you've got managers saying, "Yeah, we're going to do this, we're going to do that. Look, we're developing this protocol." Okay, fine, but are people going to use the product? If people are using the product, that doesn't necessarily even mean that the crypto is going to rise in value, because of course stocks and shares are tied to the profitability of a firm by things like dividends, and cryptos aren't. So we got no dividends, we got no profits, we got no revenues, we basically got very few fundamentals as a result. So yeah, price action is where it's at with crypto, and sentiment is so important. A guy wrote to me practically crying a few days ago, saying, I don't understand, why is crypto going down? We've got the ETFs, all the institutional money has come into crypto because ETFs were made exchange traded funds where you could trade Bitcoin and Ethereum on the stock market. That was supposed to have money pouring into crypto, and indeed it did. And Donald Trump has got all this legislation going through that's going to help the crypto world. Why is the price falling? I don't understand. And obviously he's still holding crypto at this point, whereas I've sold mine. Why have I sold mine? Because I could see that the sentiment had gone bad. He didn't see that as a good enough reason, because he believes that the fundamentals should make the price go up. But it doesn't matter what should happen. It only matters what is happening if you want to make money. If you want to kind of feel like you're right, if that's the aim of your trading, I want to feel like I am right in my judgments, then by all means, hold on to your crypto, get annoyed while the price is falling, and say, well, the fundamentals say that the price should be rising, so I'm right and the market's wrong. Yeah, well done, but you're going to lose your money, right? Whereas the way I do it is I just look at what is happening. And as I said to him, it's really simple. He said, why is this happening? I said, it's really simple. Crypto is not cool right now. And he's like, well, what do you mean? Well, it's not cool, right? And you're like, nobody's talking about it. I mean, you tell me, when you go to, when you see friends, or actually, mind you, you're a bad example because probably your friends are into crypto or trading. But all right, I'll give you an example of a friend of mine who's kind of semi into crypto, who said that he, whenever he went to parties, there'd always be at least one or two people asking him, picking his brains about crypto. And he said that doesn't happen anymore. Crypto's not cool now. I'm not saying it never will be again. It probably will be again. There'll be a new narrative. There'll be some new reason to get excited about Bitcoin, and everybody will pile in once again. But at the moment, no, it's not cool. People aren't talking about it, and so people aren't buying it. That's how markets work. It's as simple as that.
Why not trade crypto on the downside too? Like, why not ride the downtrend as opposed to just waiting for the upside?
Yeah, I do sometimes go short with crypto. The problem is, and this goes for all trading, not just crypto, shorting, it's just empirically a lot harder to make money shorting than it is going long, for so many different reasons. And I explain some of them in my book using maths, because I think the main reason why it's harder to make money is because when you're trading, and it's hard to show this without a diagram, but when shares or crypto or anything is going up, it tends to go up in an exponential way. So the price, not arithmetically, so the price will tend to go, say, $1, this is over a long period of time, usually $1, $2, $4, $8, $16, $32, right? That's how share prices tend to work over the long term, because companies don't just get bigger bit by bit. They tend to kind of build on themselves. It compounds like compound interest. So, the company Apple didn't grow by going, oh, we'll sell 10 more iPhones next year, and then 10 more the year after, we'll have 20 sold. And, obviously it doesn't work like that. It's 10, 100, 1,000, a million, right? And that's how share prices tend to go when they're doing well. So, The other way round, so you can make loads of money, is what I'm saying. Say you invested $10 in Apple, and then its share price goes to $10,000, then you've turned $10 into $10,000. Problem is when it happens the other way round, the maths doesn't work the same way. So say Apple is $10,000, and then the company starts doing really badly, right? Its price starts falling, so you short, right? On the way up, you made, let's say, going from what's $10 to $10,000? That's like 1,000% or something, isn't it? Anyway, say it's like thousands of percentage points to go Apple shares from $10 to $10,000, right? But then if you're shorting and it's the other way around because the company starts off at $10,000, but then it goes out of fashion, nobody's buying its phones, and the share price eventually goes to $10, you haven't made thousands of percentage points of profits there. You've made like 95% profit or whatever. Well, 99% when it goes to 10,000 to 10, right? Do you see? So the point is the most you can make is less than 100%. Whereas on the way up, you can make thousands of percentage points or tens of thousands of percentage points. Is a wholly different kind of maths. And so that fundamentally makes going long potentially much more profitable than going short. There are lots of other problems with going short as well, such as the enormous violent retractions you tend to get, or corrections. And when I say corrections, when you're going up, right? Say a share price is going up, it will go up, and then it'll have a correction, like say halfway down to where it was before. And then it goes up again, halfway down, like a sloping staircase. When things are crashing, they tend to crash, and then the share price comes all the way back up, maybe even back to where it started plummeting, and then it plummets all the way back down again. It's those kind of violent moves. So you can make money shorting if you're really quick, or if you're really, really amazingly patient, but nothing in between. It's just harder, I suppose. And so I don't do much of it. I do go short when I see a great opportunity in stocks or crypto or whatever, but only when I see a great opportunity. I go long much more easily.
So is there anything else we didn't touch on or talk about that you want to mention here? Anything else I think traders should know or should think about when they show up in the market every day?
I mean, I haven't mentioned at any point my number one rule, and it's the number one rule of most successful traders, but it's always worth, so it's boring, but it's always worth restating, which is cut your losses. Not every trader and not every successful trader uses that strategy. There are ways of trading that don't involve getting rid of losing trades immediately or very quickly. There are trend following strategies that involve holding on to losing trades for long periods of time, but those are difficult to pull off. So I would say for 99% of people, the best strategy is to, whenever you have a loss on any trade, you get rid of it. You get out of that position very quickly. No ifs, no buts, no but, I think it was going to come up back higher. The problem is, you see, that only the most skilled traders are able to handle large losses and incorporate them into their trading. Everybody else is basically massacred by a few large losses. That's how nearly every trading account gets destroyed. Somebody might be doing really well for ages, but then they just have they don't cut their losses on a trade because they're convinced it's going to go back up. They might even follow the moron rule, which is when you're losing money on a trade, you put more on, and then it goes down even further and you put even more on, and you keep doing it as well. It's the moron rule, because you just keep making the trade bigger and bigger as the thing collapses in price. And here's the painful part, is that 9 times out of 10, it will go back up. And the fact that you put more on will mean that you will actually make your money back more quickly, and you will get richer. And then you'll go, this moron rule isn't for morons, it's genius. Like, I've just, I was losing and now I've made my money back. It's fantastic. And like I say, even if that happens 9 times out of 10, that's still not good. If 1 time out of 10, the loss gets bigger and bigger and bigger and bigger until it wipes out a massive chunk of your account, which will happen, believe me. And then you lose a massive chunk of your account, and you only need maybe another 1 or 2 losses of that size, and you can't trade anymore. You're trading pennies. And, once you've lost your stake, once you've lost your capital or most of it, you're useless. You're not a trader anymore. You're just some doofus. You're not a proper trader no more. You need money to trade. So cutting your losses is the number one rule as far as I'm concerned, because it allows you to continue to be a trader long term.
I mean, there's so many excuses you could come up with that, and just to kind of keep the trade longer or wait for it to come back or something, but it just doesn't do anything good. You're right.
I thought we've all done it so many times, and being in the markets like more than 20 years, I've done it, especially in my early years. Like, if I could go back, if I could undo those big losses, the ones where I held on and prayed for it to come back up, and then it never did. And like I say, even though it hardly ever happens, it only has to happen it depends on your trading style, but like even once a year could ruin your trading performance for the whole year. You could have traded brilliantly day after day after day for 364 days. And then just on one day, you decide to not just hold on to a losing trade, but actually double down on it and double down on it. And you could lose your whole profits for the whole year. And I say that it's not even theoretical. Like, I've seen so many people do exactly that thing, and it's heartbreaking.
Definitely. You have a book out there. I want to give you some time to tell people where they can find your book and how to connect with you also after this podcast.
Well, there's two editions of it now. There's the Crypto Trader and the Crypto Trader second edition. The first edition, they put my face on it, you see there. Second edition, they decided that hadn't worked as a marketing strategy, having my face. So it's just plain now. But anyway, it was out a few months ago, so it's still pretty new. And the updated edition has got all the same trading strategies in it as the original edition did. But the main differences are that in the new edition, you get a massively updated history of crypto and what crypto's doing and what the relevant and most important sites are now in crypto, because everything changes so fast, of course, in the crypto world. So this was published in 2019 and was, pretty much the first book of its kind, which is why it became a bestseller so quickly. And now, how many years on? 7 years on. It's the strategies are still just as relevant, but yeah, I had to update all the stuff about the crypto world, and also loads of my more recent trades are in there as well. Some of my most successful trades, how they worked, how to do it. It's just how to do it, basically.
Awesome. We'll definitely put a link below for people to check it out if they want to have a look at your book. I've seen a lot of good reviews, so it's definitely getting some people happy.
You can buy it at Amazon or wherever, but yeah, I should have said my website's glengoodman.com. You can sign up there for updates or whatever. And yeah, I'm active on X. I'm quite active. Not that active, but active enough to make it worth visiting, because I do make commentary on the markets fairly often, and I put little videos there and that kind of thing. I've only got a small community on X. We're a humble bunch, but it's fun.
Awesome. Yeah. Glen Goodman on X. We'll put the link below for that, and also your book. 1,000 good reviews on Amazon, so definitely people are getting some good value out of it. We'll leave that link below. And Glenn, I appreciate your time here. It's been fun to talk with you about trading. Good to kind of see a bit more about how you started, how you progress in trading, and look forward to catch up with you and see how you're doing in the next few years.
Yeah, thanks. It was fun to chat. I'll speak to you soon.